He pitched us in that $17 billion round, and I did a Zoom with him. And after the Zoom, I'm like, this doesn't make much sense, but I'll have my team do some work. We did some work and we sent him a 2-page deck. And we said, here are our recommendations for taking the next step. One was the formation of a board. The second was the creation of dual class stock. The third was some reps and warranties around affiliated transactions and related party transactions. And the person that worked there called us back and literally, I'm not kidding you, said, go fuck yourself.
Any financial statement, obviously, just conversations. We were told.
It was billions, right, Lennox? Just to put this really simply, He asked you for billions. Is that right?
Yeah, a couple of billions.
Okay.
So.
Billionaire and tech investor Chamath Palihapitiya reveals shocking details about his experience with FTX, as his firm almost invested in the company when they approached him for his investment before the whole thing was exposed as a multi-billion-dollar scam. Before you continue, take a second to subscribe to the channel. Done? Now let's go over to Chamath.
This happens in the public markets a lot as well. So like when you see heavily shorted names, or when you know that certain hedge funds are on the brink, other hedge funds will go in and essentially force a margin call and a stop out, because then it's what causes all of these runs. And if you look actually inside of GameStop, the reason why you got all this gamification in the GameStop equity and a bunch of these other names was in part because of this dynamic. Folks that are highly levered, folks that don't have the right matching of risk. And what happens is they're solvent but illiquid. And then if you run the instrument into the ground, they both become insolvent and illiquid. There was an article that appeared that said that the head of compliance at FTX was also the head of compliance at a poker site called Ultimate Bet, which in the 2010s did this exact thing, apparently. Some version of this where they went in and they looked at hole cards of poker players, and then a few employees inside the business would basically play against these folks, knowing what the hole cards were, ran this cheat, stole millions of dollars.
What is margin call in the finance space? When the percentage of equity held by an investor by a hedge management is lower than the broker's minimum, a margin call is made. Securities purchased by an investor using a combination of their own funds and funds borrowed from their broker are held in their margin account. A margin call typically indicates the value of these securities held in the margin account has decreased. When a margin call occurs, the investor has two options: sell some of the assets in their account, or add more money or marginable securities to the account. Chamath says it's alright for margin calls to be made, even by FTX, as it is obtainable in traditional hedge fund management. Binance had every right to have made the call, exposing the actual level of insolvency of the FTX. But the case gets even more curious, as more curious players within the FTX management are being exposed. In the wake of the FTX crash, Twitter users have exposed FTX's chief regulatory officer, Daniel Friedberg, as a top lawyer for Ultimate Bet, an online poker platform, and had been actively involved in trying to cover up the scandals surrounding super users in 2008. In a secretly recorded conversation from 2008, which was leaked in 2013, Friedberg, Hamilton, and others discussed God Mode software used to cheat opponents and discussed ways to conceal the scandal. It's therefore uncanny that Daniel Friedberg was also the chief regulatory officer at FTX, despite his record as a dubious character. This invokes the question, was FTX just an elaborate scam all along?
He pitched us in that $17 billion round, and I did a Zoom with him. And after the Zoom, I'm like, this doesn't make much sense, but I'll have my team do some work. We did some work and we sent him a 2-page deck. And we said, here are our recommendations for taking the next step. One was the formation of a board. The second was the creation of dual class stock. The third was some reps and warranties around affiliated transactions and related party transactions. And the person that worked there called us back and literally, I'm not kidding you, said, go fuck yourself. Was quote unquote the response to us. We're like, okay. So that was the easy decision. I still thought, okay, I'll just put that in the bucket of these guys are unbelievably arrogant and smug. But Brian, I thought what you thought, which is maybe it's because they've created some money-making machine in the Bahamas. And so they have that level of confidence. You know, but then to see this thing to the extent of which is now, we're only scratching the surface.
Sam Bankman-Fried, the CEO of embattled FTX, was reportedly requesting $9.4 billion in emergency funds for the troubled exchange. According to one report, Justin Sun, the founder of Tron and cryptocurrency companies Tether, OKX, and SBF were all approached. Now that we know that SBF has cast his net even further, as even Chamath Palihapitiya was also approached for help. In a twist of events, FTX made an unethical U-turn when Chamath requested that the investment be made only after the right protocols had been followed. This was a red flag that SBF was not sincere on sourcing of funding or how he intended to be accountable for the funds. OKX CEO Jay Howe revealed that SBF had requested for billions of dollars from his exchange too, but they never reached a conclusion.
There was a lot of venture firms in Silicon Valley in this period of both not doing any work or diligence who also took the extra step and actually created classes and would teach teams how to create these tokens. Okay, and those artifacts, those video links and artifacts are sometimes on their website. They're still on YouTube. They're inside of Twitter. And what these folks would do, and we talked about this, the game that they played was they would get a team, they would create a token, they would also buy equity at some crazy valuation. The equity was locked up, but the tokens were not. And then they would put them on an exchange and sell them to unsuspecting people, and they would be able to dump these tokens. And if you look inside of that trend, what you're going to see, and Brian just mentioned this, those were the sale of securities, except it was done in a completely unregulated way. So if the SEC is really, and the DOJ is really going to take this FTT token issue seriously and what happened to FTX, they're going to start to look at a bunch of other tokens and token sales, and you're going to end up looking at some very well-known venture firms inside of Silicon Valley.
Cryptocurrency and blockchain-related projects has become one of the most attractive industries for new entrants in Silicon Valley. Many professionals are choosing to work with crypto startups in the Valley than work with any other tech companies. Kevin OLeary had revealed this in one of our previous videos too. Chamath thinks the whole process and involvement of Silicon Valley companies has been unethical and dubious.
My biggest purchase ever was Bitcoin in 2011. I've bought a bunch of these tokens that have massively depreciated in value. I think lots of investors have. I kind of fell into it as well. Like I thought, wow, this is incredible. I get to buy these tokens. They do all of this cool stuff. They represent all this value. And my experience has been the opposite of that. I've lost a lot of money in these things. And so, I really hope that regulators, not just obviously, I hope that regulators do the best they can to get investors' money back in FTX. But I really also hope they figure out all these other tokens as well, because you can just rank them in terms of market cap, start at the top and work your way down. And you will see that these were unregulated securities, Jason, that were manufactured and sold by our brethren.
With many established tech companies and investors having their fingers in the crypto market pie, we may just be scratching the surface of the rot that will be revealed, and many other exchanges previously thought to be well-grounded because of the caliber of investors involved may still turn out to be elaborate scams just like FTX. Did you enjoy this video? Then click the thumbs up and subscribe for more.